Hello again, everyone. Welcome back. This is the technical analysis of the stock market video. Back to neutral. All right, the market had a little bit of a pressure release valve this last week. We'll see where it wants to go now that it's kind of back into that neutral zone. Here's a portion of my ETF dashboard I go over every week with my members. So here's the snapshot on the index ETFs. The biggest mover to the downside, of course, were the Qs, NASDAQ 100 down 4%. Now, the SPY was right behind it, down 2%. The strongest mover was the Russell 2000 IWM, and it was up 1.75%. Everything is now positive for the year. The Qs are still in first place with the SPY right behind it. All right, that's where they sit as of today. We're going to take a look at the S&P 500 and then check in on a couple of indicators and see where things sit. So the SPX was down almost 40 points on Friday for 3 hard days down in a row, down 110 points for the week. That's the weekly picture. You can see that we're getting some pretty good divergence that's still hanging in there. It's been in there for a while, so I always said it's like it raises a flag saying caution, and you've got to wait till the price action starts to break down to have it confirmed. But right now it's still holding. All three of these things are showing pretty solid divergence here at the top. Now over here on the daily, the divergence is very short term. Okay, let's take a look at the SPY. So the SPY is going to show the same picture. I'm looking for support as this continues to sell off. I'm looking for the first level of support right here at about 542.5. Okay, right at this July 1st low. And it actually, between June 24th, June 25th, July 1st, pretty good little support area in here. If that does not hold, I quickly expect this gap to close and for it to come on down and start attacking the next major support area, which is all the way down here around 518 to 520. So that's the picture we've got right now. When I look at the Elliott wave take on this, let's just look at the, and I've just got the labeling on the SPY from the March 2020 low. So here's the wave count I've got on this. And I think that we are trying to finish off this third minor wave to the upside. Okay. Now, when I go to the daily view, I'm going to show you the alternate count that I've got in here. The alternate count says that the minor wave 3 ended at the high right here on July 16th. And that's a very real possibility. Okay, because of the way things look, the structure in here. I'm staying with this wave count. We'll see how far of a pullback we get with this wave 4. My target is still up here in this zone, but if this pullback starts to get greater than 38% of the third wave in here, of this third wave, then I'm going to be starting to look at switching to this alternate count. So we'll see what we get right now. We got a pretty straight pullback. I'm really looking for this to possibly just kind of chop around for a couple of weeks. So we'll see what happens. But that's the picture. That's what we're watching. And of course, we just continue to watch the price action. All right, so let's take a look at a couple of indicators. Okay, this is the high-low on the New York Stock Exchange. So this is the net for the number of stocks hitting 52-week highs minus 52-week lows. And you can see we had a really strong spike earlier in the week. And we got up here as the second highest reading that we got this year. And then all of a sudden, really quick and strong collapse all the way back down to on Friday. We only had 32 stocks hitting, that were a net positive on that indicator. Now, let's take a look at the NASDAQ. NASDAQ, a little more extreme. You can see when this reading that we had back here, this is the highest in a couple of years. I think it went back to 21. Okay, so we had a huge surge And then look at the collapse. Quick collapse down to minus 51 reading. This is going to be real interesting to see where do we go. I mean, this chopped around a lot on the NASDAQ. The other thing I want to take a look at is the McClellan oscillator, and then I'm going to look at the VIX. So let me pull up the McClellan oscillator. This is where it really jumped out at me that the market is back to neutral. Okay, the reading on the McClellan oscillator that I have is 13.2. So let's just say 13. I think of plus or minus 50 as like a neutral zone. We were all the way up here, well above plus 200, extremely overbought, stretching that rubber band. And now all of a sudden, all that pressure has been released and we're back down to neutral. And they could take this thing wherever they want to go. I mean, you can rip it on down south and get it extremely oversold or bounce it around. But that's where we sit as of right now. Okay, so that's the McClellan oscillator. And then let's take a look at the VIX. This is kind of weird. We had a really extreme reading, and I got a couple of different data sources that confirm this. Anyway, the big thing is it was up 59 cents on Friday and up $4.06 at the close for the week. So big, strong move. This was the highest close on the VIX since back over here on April 22nd. So it's a big, strong move. Now you start to think, well, wow, okay, markets are really going to head south. And then you look at the weekly and you come back over here and say, when was the last time we were up into this zone where things had tendency to reverse? And that was the fall of 22, October of 22. Since then, we've had 1, 2, 3, and now we're into the 4th spike in volatility. And notice how each one of those so far have not taken out a prior high. We'll see where this goes. Do we go above the surge that happened in April, which was a high of 2136? So we'll see what happens right now with the volatility. Keep an eye on that. Okay, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Everyone have a great week. We'll talk to you on the next video.